Okay, good morning, good afternoon, good evening from wherever you're watching me from. Welcome back, everybody, and welcome back to the channel. Today, we're looking at how you can trade US30 successfully as a day trader. US30 is part of the indices group. When you talk of indices, the index, it's about US30, S&P 500, US100, France 40, and those kind of group in the indices category. But one thing I like about US30 is that it has a different feature. Though most of the indices follow each other, but they all have their own characteristics and they all have their way they move. But US30 is a little special because it's one of the old indexes that has been there for some time. I like its movement. Its movement is not that hyper. It's very dull from the beginning, so you're able to actually make good decisions using US30 when you're trading. Okay, so today that's why we're going to look at how the 9 strategy I'm going to teach you, which you can use to trade US30 as a day trader. So that wasting my time, let's go to the charts and let me explain some concept to you, and then we see real practical examples and some of the trades you can take with these strategies. So let's begin and let's see what we can cover for today. Okay, so in trading US30, we are going to use a concept called initial balance. We are going to use initial balance with Fibonacci axis to trade as our strategy. So in trading, when you say initial balance, in English, initial means beginning, right? Beginning of anything is initial. So in trading, initial balance refers to the price range established. The price range established during the first 1 hour of trading hours. So the first 1 hour of trading hours. What does it mean? It means that, let's say this is our charts. We are going to use 5 minutes charts. So we are going to use 5 minutes chart to trade this strategy. So when you open US30, we are going to trade on 5 minutes chart. So the first 1 hour, how many candles forms an hour? If you have 5 minutes, then it means 5 times 12 of the 5 minutes candles will give us the first 1 hour. So the first 1 hour of trading activities, the price range. So let's assume that this is a chart, and then the market begins here and begin to range. The first 1 hour of trading activities is what we call the initial balance. So this is the initial balance. Can you see? This is the initial balance. So that's the first 1 hour of trading activities. Why is this very, very important? Because the first 1 hour of trading activity determines what actually the market may do next, or how the day is going to be, how that particular asset class is going to behave within the day. So knowing your initial balance is very critical as a day trader. So with this concept, how can we trade around it? Before you can trade around it, you must understand 3 basic concepts. The initial balance volume. When you say initial balance volume, how much volume is there within the first 1 hour? So the volume indicates that if you have bigger volume, let's say the first 1 hour we have higher volume, it indicates that there are bigger players in the market, which means the moment the market opened, there were some huge traders who are interested in trading that particular day. So because they have huge funds, it's able to move the market wider. So this is what's going to be the effect. So if, let's say that there are bigger traders in the market, in the first 1 hour, you realize that the market has strong movements. It shows that there are bigger players in the market. When it happens this way, it means that particular day, we are likely to have a range bound session. When you say a range bound session, it means after the first 1 hour, since there are big players in the market, it's likely the market is going to range for the rest of the day because both players in the market are all stronger enough. So the market is likely to range for that particular day. You must also understand the initial balance range. If the initial balance range is wider, like this, then it means the market is likely to trend. And if the initial balance range is narrow, let's say that the market begins from here and is very narrow, it means that day is likely that the market is going to really trend or spike up. That's after the market breaks out of the initial balance, is likely to spike up. So if you have a wider initial balance, it's likely that the market is going to range for the day. If you have a narrow initial balance, it's likely that the market is going to trend for the day. If you have an average initial balance, when you say average initial balance, means that it's neither wide or neither narrow. So at somewhere like this is average. It means the market is going to behave normal, which means it may trend for some time, reverse, maybe come back cross the initial balance and trend again. So those are the three type of market days you can get using the initial balance. So with this, let's go to the chart and let me show you real example in the chart to see what I'm talking about. So we open our MT5, and on our chart you can see that this is our US30 chart. So how do we apply this concept? Let's open any part of the US30 chart. When you open US30 chart, you go to M5. So we are going to trade on M5. What do you see? From now, you see that the market has already played, but can you spot any important zones on the market? The market looks very boring to look at, right? So what you have to do is that now from this zone, we're going to apply our initial balance strategy. So what's the initial balance? The first 1 hour activity. So at least after the first 12 candles, what happened? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is the first initial balance of the day. So we are concerned with the activity that happened here. We determine the rest of the day, or how the market is going to behave for the rest of the day. That's what initial balance concept says. But we are going to trade the initial balance with what we call the Fibonacci arc. The Fibonacci arc also has a different concept altogether, but that's what's going to determine the initial balance range. It's a powerful tool you can merge with the initial balance to get a very good edge in the market. So the Fibonacci range is already here. You can see that this is a Fibonacci arc. If you already don't have it on your chart, when you're using MT5, you can right click here and go to customize, and you can find, when you go through here, you can find the Fibonacci arcs, and then you can insert, and then it will appear here. So how does the Fibonacci arc work with the initial balance? Now you already know that the initial balance is what? The first 1 hour. You're looking for the point where the market reverses in the first 1 hour of the market. So you could see that clearly from this chart. Let me zoom it out. Where is it? So we could see that clearly from this chart. Within the first 1 hour, market began from this side. Market began from here, traveled all the way to here, and it reversed backwards, which means that the market reversed. So this is what we need to do. We take our Fibonacci arc, we move from the point where the market opened. This is a bearish candle where the market opened, and drag it all the way to where the market reversed. Now we have our line. Do you see how very important this line is? See what happened. Without even explaining this line, you could see that the market actually respects this particular zone, which means before all this side of the candles will play, you can assume what the market may do next using this line, because this is a very good indicator working with the initial balance. So let's begin again. So within the first 1 hour, we are waiting for the point where the market retraced within the first 1 hour. So let's see. We take our Fibonacci arc, we move for the point the market began, and all the way to where the market retraced. And now we have our Fibonacci arc drawn. The next tool we are going to use is what we call the Fibonacci expansion tools. So Fibonacci expansion tool actually determines how far market is likely to travel. So combination of the initial balance, Fibonacci arc, and the Fibonacci expansion tool is a very powerful and very high probability trading strategy. So you can see that from here, when you click on the Fibonacci expansion tool, as usual, if you don't also see it here, then you can just right click, customize, and you can put it there. Customize, and you can find it here and you can insert it. Okay, so if you click on the Fibonacci expansion tool, now look at something here. From this side, from the ending of the retracement to the beginning, from here, when you click, you just have to click, and no, this is wrong. You just have to click from the beginning to the end. Then you see that there will be some lines drawn here. The same way, if you want this line to appear at the top, you do the same thing. You click from down to top, which means the line is going to be upwards. Now, this line become our very important line. You see that we have the 161.8 level, so you can add one more line here to make it clearer to you. Now you draw your own lines, horizontal lines, make it very stronger. And then we have 61.8 level. We have another 61.8 level. These levels are all what you're going to look at as a trader. So now you see, we've combined initial balance, Fibonacci arc, and Fibonacci expansion tools. So now wherever the market is trying to go, or wherever the market is trying to behave, we will be able to determine it. So what is the strategy? The strategy is that first, determine the first retracement in the first 1 hour of activities, or we want to wait till the market begin to retrace. So the market begin to play. Then we wait for a point where we will see a retracement. What qualifies to be a retracement? At least, if there is only one candle, it cannot be a retracement. But when there's about 4 or 5 candles consecutively or in that direction, it means that the market is actually retraced. Then we draw our Fibonacci arc first before we add our Fibonacci expansion tools.